Sorry, and that's when we say hello to Craig. Craig, welcome to you. Sorry, mate.
Good afternoon.
I haven't talked to you for a while, actually. I think, probably about 3 weeks. The world's changed a lot in 3 weeks, it has to be said, Craig.
It has. I'm in your hood. I'm in Central Otago on a bluebird day up at Stevefield, so to get a bit of noise in the background.
Are you at Coronet?
I'm at Coronet, and there's no wind, no clouds. Well, it might be a little bit out west over back of Mount Earnslaw, but no, she's just beautiful. Lots of snow, 40 centimetres fell on Tuesday. Very happy people around, including, I imagine, the CEO of NZC.com, who owns the field. Very happy.
Yeah, I have to say, it was looking grim this time a week ago. There was bugger all snow, but finally Mother Nature's done her job. Are there many overseas tourists around you, Craig?
I am amazed arriving in Queenstown yesterday. The shuttle driver was from Uruguay. The coffee lady was from Brazil on the coffee cart. The service people in this town are amazing. Migrants, I really value them. On the field itself, not so obvious. Don't hear many foreign voices, certainly not many from America or Australia, for example. So I'm picking these are mostly locals. Obviously not students, etc., because of school and university, but it's not crowded, that's for sure. So the weather and the snow's great, but I think the volumes are well down, and that's what the townsfolk were telling me yesterday, that it's been a pretty tough season because the snow just didn't come for those 3 weeks over the school holidays. Yeah,
that's right, and that's the time that New Zealanders tend to go skiing. Mind you, there'll be a bit of bunking, I have to say, at the moment. Craig, today I think it's officially that tax cuts will be provided to us. To be honest with you, I think I had a look and saw it was about $20 a week or something like that. Tell me, mate, how much are you getting, A, and B, is it going to make a difference to your life?
I haven't been on the calculator. Strictly speaking, it's a change in tax threshold. So what was 0% tax rate up to $14,000 is lifted to slightly over $15,000 and all the way up the scale. So it's more tax thresholds being raised, as of course, the value of our money's been debased with inflation and tax drift, people moving into higher tax brackets. So look, this is going to make a difference. I'm probably like you, Michael, $20. Look, it's important. We need to keep going, though, not just once. Let's keep this going. But to do that, we're going to need a stronger economy. If you look at the fiscal numbers, the corporate tax take is starting to wane. Corporates are finding it harder after a period of time when the consumer has been keeping their hands in their pockets, and you see that in retail sales. But if we watch the corporate tax take, you'll get a better idea how tough it is for companies as they have to reset to try and cope with falling revenues.
Yeah, I'm interested also in whether or not you think it's inflationary. Does it make the Reserve Bank's job any more difficult, less difficult? It doesn't really matter.
Well, there's sort of a quite a neat way of looking at it, which is the biking into the headwind, which I think you quote me on quite a bit. But what it means is it's hard for the Reserve Bank to cut interest rates when the economy has been fueled or propelled by government spending profile. Now, the government's tried to cut that back. Tax cuts have been, in the Minister's of Finance's mind, fully funded in the sense of there's new measures to try and offset that. But overall, we know that there's a deficit until 27-28, and we know that the government needs $12 billion worth of bond issuance or borrowing to fund that deficit. So while you have a deficit and spending present, it makes it harder for rates to come down. So at the moment, the market's quite pushed. It's quite optimistic that rates will fall. But my argument is it just may take a bit longer than people think.
Yeah, the other thing that's interesting, though, too, Craig, is mortgage interest rates are already starting to come down or trend down a little bit. Not much, but, both the trading banks are offering that. They're anticipating, obviously, that the OCR is not going to go higher, yeah? It's not going to become worse. That's
right. So your 1, 3, 5 year interest rates are coming down, deposits and mortgage rates. And some of that's an anticipatory move. but also market share. Don't forget that, the demand for loans is not strong either, so banks are trying to compete with attractive mortgage rates to try and get people to finance the home. But of course, cost of living, income uncertainty, unemployment uncertainty, it makes it hard for people to commit. So it's going to be a period of time where mortgage lending won't necessarily be that strong.
And I'm also interested in your thoughts on the government's moves around housing supply, talking about fast tracking, really going back in lots of ways to the sort of increasing urbanisation, particularly in inner city New Zealand. Lack of it's going to cause some interesting problems in some of the heritage suburbs around this country, but nevertheless, do you anticipate those will have any impact at all upon house prices in New Zealand and the availability of reasonably priced homes for first home buyers?
Well, it's a supply and a demand equation, isn't it? So the Minister of Infrastructure, Chris Bishop, has argued that he wants to flood the market with new land made available through council processes and central government processes. That's one part of the story, but you have to build infrastructure to connect those sections, and you have to get consent, and you have to have people willing to borrow to buy a home, or if you're a landlord to buy properties and rent them out. So it's not just one bullet, is it? You need several levers working to make it happen. And we know from data that building consents, have been falling over the last 12 months quite severely. So land supply is important, but confidence, finance costs, income, affordability are other parts of the equation.
Yeah, I guess that's true too. Listen, and the other thing that the government have commented on the last 24 hours is the massive rates rises that local government is inflicting upon households, which is real money that's going to be taken out. The increases will be much more, one would expect, Craig, than the tax concession that might have been provided today in terms of real dollars. Is it time that local government was reformed in this country? Because it does seem out of control at the moment.
I'm not sure out of control is the right description. Don't forget, it's not just rates, it's insurance. Some people have probably had double their finance costs as mortgage rates have risen from where they were 24 months ago. So it's not just rates, but there is an element of catch-up. If you read the Auditor General's report, he will tell you that local government is not funding the wear and tear of their infrastructure, so-called depreciation. It's well behind. Some councils need to raise rates to ensure that they can borrow more to fund infrastructure. Your high-growth councils are typical in that area. And some councils are facing population pressures, and they need to roll out roads and services. So the issue is probably going to come in front of us in the not too distant future, I believe, which is an increasing focus on user pays. So taxing through rates a population for new infrastructure is always difficult for those who believe they've already paid a lot of rates already for their services, and they don't get anything new.
No, they don't.
But
that's for real.
It's got to fund new population that comes in. And the population's growing. The migration numbers, we all know, net 130,000 people coming in. They need to live somewhere, and they need to use local government services.